So first off, I'm going to go through what we're going to talk about today, and that is, number one, we'll gain an awareness of the uses for financial statements. We're going to recognize the basic structure of financial statements, and we've got four of them: the income statement, the balance sheet, budget, and a statement of cash flows. And these are all going to be done real generically because we have different kinds of organizations, and I'll kind of talk about some of the differences in the different organizations as we go. Next is recognize significance of the financial statements, and finally identify some of the relationships between the financial statements. I managed to do that without killing myself. So number one, who uses financial statements? Sean uses financial statements. Well, and I was going to say he probably does because they just had a successful mill levy increase in Crested Butte, so he's pretty happy about having $25 million to sit on. So let's talk about some of the people that use financial statements. So stockholders, and let me back up one section. There's multiple kinds of organizations out there, but basically boil down to three: private organizations, or private for-profit corporations, private not-for-profits, and government. So we'll talk about all three of those. Stockholders applies to private for-profit organizations because basically they have owners. Nonprofits have people like donors, and then of course governments have taxpayers. So all these people contribute to the corporations or the organization. Some of them are voluntary, like stockholders and donors, and some of them are involuntary, like taxpayers. But fundamentally, that's the same thing. They are contributing capital to the organization. So what do stockholders use the information for? So I had to move over there to get my notes that are now in another place. Anyone? Bueller? Okay, well, okay. Stockholders are looking for a good investment. What's the main reason you hold stock in a corporation? Okay, well, you want to make money, profit. Okay, well, there's two ways to make money. One of them is you get a cash flow from that stock. Those are called dividends. So if they pay you dividends every year, that's a cash flow from the stock. That's a profit that comes back to you. The other kind of stock, other reason you hold stock is for capital appreciation. So you buy low, you sell high. Okay, that's the other reason that you buy stock. Okay, so that's what stockholders are looking at: is will this corporation be able to provide me with a cash flow, or will it be able to provide me with capital appreciation of my stock? And you look at things, when we get into the financial statements, we'll look at some of the stuff that you would look at as a stockholder and say, these are the kinds of things I look for to make sure that this is a going concern. It'll be available, it'll go on so that the stock will continue to have some value, and it'll be worthwhile for me to hold it. Donors, what are donors hoping to get out of their donation when they donate to a nonprofit? A good feeling, okay. Tax break, well, maybe. They want to know where their money is going, where it's advertised. Okay, they're all good answers. So yeah, the donors, yeah, they might be getting a tax break because they can do that, but they also are giving money to an organization that they believe in. It's providing services that they think are needed in the community and they want to support. So if you have a private nonprofit ambulance service and they want to donate to you to help make sure that you can meet your operating expenses, that would be something that a donor would do. And they might want to make sure that you have enough assets. So property, plant, and equipment, cash to pay your employees, that kind of stuff, to make sure that it's going to be an ongoing concern and that you'll be able to provide those services like they want, and they're not just throwing money into a black hole that's going to disappear. So that's some kind of what donors might be thinking of. What about taxpayers? What do they think about? And I see a lot of government agencies in here, so you guys are probably pretty sensitive to this. So what do taxpayers want? Okay, taxpayers want service, yeah. What else do they want? They want to know their tax dollars are going to good use. Cost efficiency of their of the organization. What else? Want to make sure you're being good stewards of the money that they're giving you to do a job. Okay. So yeah, those are all good answers. So financial statements are used by taxpayers to help them understand that. And it's also a way for you as a government to help provide that information to your taxpayers so that they have faith in what you're doing. And when you're like Sean, you go to the voters and ask for a mill levy increase for a general obligation bond. They say yes because they believe in what you're doing and they support the project that you're working on, and they have faith that you're going to execute the project and build them that new fire station or provide that new ambulance or whatever. So customers, what do you think customers might use it for? Yeah. Great answer. To see that, to make sure you're going to be around in the future to support what you bought. Okay, that's one thing. Other thing is make sure that you have the financial wherewithal to provide the services and provide quality services. If you don't have enough money to provide quality services, they may choose another provider. And a lot of times when it comes to 911 services, that's not really an option. But obviously, there may be other times when it does become an option, when they can say, well, I'm going to choose ambulance agency B to take me to the dialysis center versus ambulance agency A. So customers use it as well. What about employees? How many of you guys looked at your organization's financial statements before you took your job? Well, all that college wasn't totally wasted. Okay. But why do you think employees might look at financial statements? There you go. Job security. Okay. Make sure that it's a going concern. But you also can learn things from the financial statements as to how they prioritize their employees in their financial decisions. Okay, that's another way that the financial statements can be used by employees. What about suppliers? Okay, are you going to pay your bill? They want to make sure that you're going to be able to pay their bill. And they may want to make sure that you're a going concern so that you become a regular customer. Okay, if you're an ambulance agency, you buy ambulances, you buy cardiac monitor defibrillators, you buy cots, by pulse oximeters. Okay, how long do those last? Take a guess. Depends on how nice your crews are. They don't last forever though, do they? Okay, so your supplier might say, well, I want to make a sale of my cardiac monitors this year, and in 5, 7, 12, whatever years, they're going to be, wearing out of service, whatever. I want to be able to sell them more. And that's where a supplier wants to see if you have a going concern, in addition to being able to pay your bill and make sure that you'll be buying their supplies and things like that. So suppliers use financial statements in that way. What about lenders? They want to know that you're going to have the money to pay back your loan. Right. So they're going to look at, do you have, an organization that's going to be an ongoing organization. So if they're going to give you, let's just keep using Sean as an example. They're going to give you you guys got a 30-year loan on or 30-year bond, 20-year bond, something like that. Okay. Ever the mediator, 25-year bond. Okay, a 25-year obligation bond. Okay, they want to make sure that, well, over that 25 years, either A, they'll have enough money to pay it back, or B, they're going to have an asset that they can expropriate and get their money out of it. So they're going to want that. And lenders look at financial statements to determine that. And when you create your financial statements, make sure that you paint the picture that you're able to do that if that's one of the things that you're looking for. What about grantors? Well, what do you think I look for? Okay, so look for need, financial need. Look for a history of completing the projects. Looking for a cost effectiveness of the project. Okay, well, the cost effectiveness of the project is inherent with projects. That may not show up in the financial statements because that may be only part of your organization. But you're right. I think if you have a grant or a need-based grant, they want to know that you need the money. And you need to show them that you need the money. And we'll talk a little bit about, how you can do that. But that's one of the things that we were talking about earlier. Is the reason for having this talk is that people weren't actually showing that they needed the money. They just said, well, they make us give a financial statements. Here you go. You figure it out. And that's not a very effective way of bringing your case to the grant reviewers. A more effective way is, here's our financial statements, and this is what they say, and this is why we need the money. So that's what grantors are looking for. Now, the other thing that they're looking for is similar to what some of these other users have looked for, and that is, are you going to be an ongoing concern? So is this place going to be around to use that ambulance you're asking for money for another 10 or 15 years? Is that organization going to be around for 10 years to be able to use the cardiac monitors you're asking for help buying? Or are these guys going to go out of business next year, and then we're stuck as a grantor figuring out what to do with a bunch of things that we don't know what they do? So that's another thing that grantors look for is, again, like everyone else, make sure that it's a going concern so that you'll be able to implement the project and see it through to its completion. A lot of the projects that grantors fund are capital projects, mostly because they're a lot easier to analyze than personnel projects. But capital projects last a long time. Who's got the oldest ambulance in here? Why did you look at Brandon? Alan's got the oldest ambulance. What's the oldest ambulance you have? 2003? I think we can do better than that. You got a 2001? Anybody else? Anybody else? Yeah. Yep, you got a 74 County, but it's not used as an ambulance anymore. Yeah, I was going to say, I know there's a 93 Ford in use in Routt County. And it's still in good shape. It's only got 3,000 miles. So, but yeah, look at that. That's 30 years. Okay. Are you going to be around 30 years to use that piece of equipment? We got somebody from Zoll here. How long do you expect your cardiac monitors to last? 10 years? Okay. So yeah, you expect something to last 10 years. Are you going to be around 10 years to be able to use that and implement that project and use it to its full extent? Okay. So that's kind of what grantors look for. But again, on all of these, you need to look at what the audience is and make sure that you tell your story. So if you are a corporation and looking to get more capital through stockholders, you need to be able to talk to to show to your stockholders that, yeah, we're a going concern, and you will either A, have price appreciation of your shares or expect to have price appreciation of your shares, or you expect to have a flow of dividends to return that money, to return on that investment. Okay, you need to show that through your financial statements. Because that with taxpayers, they don't have a choice about whether or not they donate to you. But you also need to show them that you're using the money well, you're being frugal with their money, being a good steward of it, and you're providing the services that they want at the level they want, so that then they're willing to continue to give you money, or they may even give you more as it's needed. Because I don't think any of us have said, oh, our mill levy is way too high, let's give money back. How many people have done that? Anybody? I see Brandon wishes people would do that. Yeah, I was going to say in his district. Okay, regulators. What do you think regulators do? Making sure you're following the rules. Okay. Well, that's part of it. Making sure services are being provided to the community. Okay, that's part of it. Well, your costs are within your mission. Okay, so you're spending money on things that you're allowed to spend your money on. Okay, good. Okay. Well, that's some of the things that regulators look at. And I can see that since most of us are governments, that's kind of what we think about. Now, if you're a private corporation, one of the things is the regulators, if you have public stockholders, the Securities and Exchange Commission tells you that you need to present financial statements, and you need to present them a certain way so that that stockholders or people that are considering being stockholders can look at your financial statements and compare them to other corporations. Okay, so you have to follow rules, accounting rules, and things like that to do that, and that's required by law. They verify that you do that. Nonprofits, IRS is a regulator that is a problem for all of us, but it's especially for nonprofits, because nonprofits have to be using the money for what they said they would use it for and not for purposes that it's not allowed. They also get rated on whether or not they have a lot of money going towards services or going towards administration. So when a donor gives you $1, how much of that dollar is going towards administration and how much of it's going to actually providing the services that you say you want to provide? So let's go back to our nonprofit ambulance. How much of that is going to pay, the director and doing fundraising and things like that? And how much of it is actually supporting the ambulance service? How much of it is actually providing, helping provide patient care, helping make sure that you have paramedics or EMTs to provide services, that kind of stuff. So those kinds of things are what the regulators look at for a nonprofit. And of course, with governments, you got all kinds of regulations and requirements that you got to jump through. And that's what the regulators are looking for. So everybody got, it's budget time. So how many people know when their budget's due and what they have to send into the Department of Local Affairs? 1, 2, 3. Okay. So yeah, you have to, every year governments have to approve a budget, and then they can only spend what's in that budget unless they make a supplemental appropriation. So the budget basically is legally limits what you can do with your money as a government. You have to do that. Then the government also has to do an audit every year of their financial statements. If they're again, this is generally talking, because there are some exceptions to everything that we'll say today, because there's always a rule, there's always an exception to every rule. But fundamentally, governments also have to provide an audit to say what they spent their money on, to prove that they spent it on what they did, what they said they were spending it on, and to prove that they spent within the limits that are authorized by their budget. Because the government can't spend money that it's not authorized to spend. And that's the process. And that's why I imagine most everybody had their budget hearing in the last month. So that was an opportunity for the public to say, yeah, I think what you're spending your money on is legitimate and we support that. Or we object to what you're spending your money on and we wish you would change it. And you guys need, as your board of directors, who's elected by the public, would have to make that decision. So any other ideas on other uses for financial statements? I'm going to get rid of my notes. I'm completely ignoring them. Well, I was going to say, what's that? Yeah, well, I was going to say, I have a really large carbon footprint. So I have a Duramax that has "I love coal" on the back bumper sticker. So I still use paper, but that's because I'm old too. So any other uses for financial statements that you can think of? Okay, well, we'll go on here. We'll start talking about, let me see if I can gently move this to the next one. All right, there we go. We'll start talking about the financial statements. First one we'll talk about is an income statement. And another name for this is statement of activity. So if you're a private corporation, you call it an income statement. You have, where's the clicker? You have revenues, you have expenses, and then you have your profit at the bottom. Now, the sample income statement I put up here is for the local government. So their revenues are government revenues, their expenses are government expenses, and they have a surplus instead of a profit. So in a government, they call it a statement of activities. But it's basically the same thing. So when somebody asks you, what's an income statement? You go, oh, I know what that is. Shows my revenues, my expenses, and my profit. That's what an income statement is. So we're done with that one. No, you know me, I can talk forever. So one of the things you want to know about an income statement, though, is it's for a period of time. If you're a government in Colorado, your period of time is going to be January 1 to December 31 generally. Okay, so it's what revenues came in during that period of time, what expenses did you have during that period of time, and what was the net result of that. So that's what an income statement has. It's also retrospective. So it's what happened before. You can't have an income statement for next month because the next month hasn't happened yet. You don't know what your revenues are and you don't know what your expenses are. But you can have an income statement for anything that's happened in the past. So it's always retrospective. So what are revenues? Okay, income, anything you have coming in. Resources, economic resources that are of value to you. Okay. Now this example is a county government, and their revenues are things like user fees. So your Cheyenne County, there's a line on Cheyenne County's budget that says, okay. If you're a county government and you're like Cheyenne County, you have an ambulance service, and they charge user fees for use of the ambulance. So they'll have things like user fees. Governments generally have taxes because that's why you form a government, so you can get everybody to pool their money together and provide services. Okay. couple of types of taxes, property taxes and sales tax. Which one's better? It depends. On what? What's that? Where you live?
You have no business. No good.
Okay, so if you have no businesses, the sales tax does you no good. Well, actually, there's still a sales tax because some sales taxes are collected based on where you live. So, for example, when I buy an automobile, Routt County gets a chunk of that, even if I buy it somewhere else. So when I went up to Wyoming, bought my Land Rover, I brought it back to Colorado, got it registered. Routt County got a big chunk of change for a transaction that occurred in Cody, Wyoming. And if you have people that live there, there's gonna be sales taxes because they buy stuff from Amazon, they buy stuff online from various retailers. So they can suck into that. So there's sales taxes. What about property taxes? Was they better than sales taxes then because they affect everybody? Might be more consistent. And generally sales taxes are easier to, or yeah, more readily collected than sales taxes. So property taxes are more readily collected than sales taxes because they're attached to the property. And if they don't pay, the government puts a lien on the property and then sells the property and gets the money that way. So ultimately you get your money if you're a government on property taxes. But are they popular with landowners? See a lot of people saying no. Big comment back there about if you're a small business, you hate property taxes. Yeah, because they hit small businesses harder because of the way Colorado assesses property. But yeah, the point that was made earlier about them being more reliable, yeah. Basically, when you levy a property tax, you can collect it. It usually comes in pretty close to what you ask for. But it's obviously unpopular and it doesn't always generate enough revenue because what if your property is mostly agricultural land? It gets assessed at the 29% rate, but the value of each acre or the value of each unit of land is pretty small. So it doesn't generate a whole lot of revenue. Or you have a lot of federal lands and you get no taxes. Or you have a lot of state government land, or a lot of land that's owned by nonprofits, because nonprofits are non-taxed. So I know in Teller County, there's a big organization that's owned by a church, and there's a giant chunk of Teller County that's not taxable. So yeah. What's that? Yeah, Winter Park Skier is owned by the city and county of Denver, so they pay no taxes. And I'm sure Aspen and Vail are really happy about that. And they never grumble about it. Okay. Other types of revenues for government, grants. We talked about grants. And there's a couple different kinds of grants, but one of them is need-based. Other ones are just, like right now. Let me rephrase that because I almost let I work on the dark side, so I have to be careful what I say. The federal government is throwing money around like, well, drunken sailors. So a lot of that is grants, and they aren't need-based. It's like, you want money? Here you go. Okay. So some of them are like that. But some of them are ones that are actually need-based. So, but there's grants, and occasionally there are donations to governments. So there might be, well, like in Lyman, there was an estate, guy died, said, you know what, I want my estate to go the proceeds from my estate to help the local ambulance service. So they get a donation every year from this estate to support their ambulance service. So it's kind of like what they would have done if it was a nonprofit, but it's part of the town government. So expenditures. What's the usually the biggest expenditure? Personnel, wages and benefits. Okay. Other expenditures, see, operating expenses, financing expenses. Did you pay interest on a debt? That'd be a financing expense. What are examples of operating expenses other than personnel? Other operating expenses. Fuel, maintenance, medical supplies. Okay, utilities for your buildings. Make sure that the lights are on and they have heat, so your IVs don't freeze. Okay, training your people. That's an expense. What other kinds of expenses do you guys show? Now, these are really abbreviated income statement, or really abbreviated examples. And when I was preparing for this, I thought, oh, I'll just go grab some from, the grants I've seen or that are posted online or whatever. And you cannot believe the amount of detail that some people go into on their income statements. And it's like, no one really cares that Station 3 has 2 phones, Station 4 has 4 phones, Station 1 has 3 phones. They really just are interested in what your phone expense was. So it was hard to find simple, straightforward. Now, when you're talking to your board of directors and making those ultimate decisions on how you spend your money, it's important to have that amount of detail. But when you're making your case for, are we in financial need for this grant, for example, lump things together into groups. So this is actually a really good income statement for a grant. Shows your sources, your general sources of revenue, shows your operating expenses in sufficient detail to say, yeah, this is a pretty typical government. They spend a ton of money on people and they buy quite a bit of paper and they have a couple of road graders, so they obviously spend a lot of money on fuel. Okay. That's really a good financial statement if you're trying to make a message, because it doesn't bury you in details. It gives you a good summary of what's going on. And it also shows you whether or not they're doing a good job with their money. They're not overspending. This income statement shows you had a surplus of $500 on a $2 million budget. Okay, so basically as a government, they're doing a very good job. They're only collecting what they need. They're using it for what they're supposed to use it for. And they don't have extra. So that's something that you can find from an income statement. So we were able to deduce all that just from these 10 or 15 lines of information. So that's that's the story that your income statement tells you. Where's our money come from? Where does it go? And are we using it appropriately? Now, if this was a private business, you would hopefully see a little bit larger number down there. Instead of a surplus or deficit on a private business, it would say profit or loss. And hopefully on a private business, you would see a profit. And you'd like to see a bigger profit than a smaller one. But obviously a government or a nonprofit, they're not made to have profits. They're made to take the money, use it for a purpose, use all of it for that purpose. And this actually shows a good example of what that would be. And when this government shows up in a grant, and this government says, yeah, here's what our revenues were, here's what our expenses were, and here's what our surplus was, you can say, these guys probably need a grant more than a government that says, yeah, we got $2 million in revenues. We only spent $1.5 million and we had a $500,000 surplus. It's like, well, these guys had a $500 surplus, so they probably are more in need of a grant than $500,000. So remember, when you write a grant or you do something where your financial need is assessed, you're not doing it in a vacuum either. You're being compared to everybody else that applied in that grant cycle. When people are looking at your income statement, they're looking at your income statement, but they're also comparing it to other income statements. So whether you're a private business, whether you're a nonprofit, be aware that you're being compared. And this might be a good time to talk about accounting standards. Now, I mentioned earlier that when we were talking about regulators, that the Securities and Exchange Commission says that privately held stock businesses have to meet certain requirements. There's what's called the Financial Accounting Standards Board, FASB is what the shorthand is for that. It basically says, here's the rules on how you report financial statements. Here's what revenue means. Here's what expenses mean. Here's how you calculate your profit. Here's how you calculate your loss. And mostly that's so that everybody does it consistently so the government can say, okay, you see your bottom line, we're going to take a bunch in taxes. But they have a standard of how they do that. Private nonprofits have to also comply with those. But obviously the taxes aren't an issue because they're tax exempt. But they still have to comply with FASB requirements. If you're a government, there's another board called the Governmental Accounting Standards Board, Governmental Accounting Standards Board, GASB, which is same thing, except for governments. And governments have some different ways of doing things, which is why there's two standards. But all the governments are supposed to use that. Now, in Colorado, small governments are allowed to do different things than large governments. So there's sometimes you can get away without using generally accepted accounting principles. But basically, if you're presenting these, you can do them in such a way that it's comparable. And you got to remember, people are comparing yours to everyone else's. How am I doing on time? Okay. I just wanted to make sure because I forgot to bring a watch. Since I don't ever get out of the house, I rarely wear a watch. Okay, next financial statement is a balance sheet.
Quick question on your revenue. So one of the things that government worry about is reinvestment. So if your profit or loss or surplus deficit is only $500, how do you save for buying new monitors, buying new cops, replacing the stuff that you have to save for over the long term?
Okay, so the question was, as a government, how do you account for, or how do you make money for reinvestment for saving up money to buy an ambulance, saving up money to buy cots, saving up money to buy that? Well, the way you do that is you put a line in here that says, we're putting money aside as an expense this year that's going towards this purpose. So assuming, okay, see these guys got a DOLA grant for $250,000 to buy a road grader, so they only had to come up with $25,000 of their own. Assuming they needed a road grader, but they didn't get a DOLA grant, they needed to come up with $275,000 somewhere. Well, what they could have done is said, well, it'll take us 10 years to save up. Let's put in $27,500 in a line down here to go towards our road grader fund. So that's a legitimate expense, and that would be an expense that you would be reporting when you make your budget, and then also showing on your income statement that, yes, we put this money aside for this purpose. And then that ties to your balance sheet. And if you put money aside, you would have it down here as a restricted amount of money that you're holding for a particular purpose. And I'll get to that here in a second, in a little more detail. So next is the balance sheet. For a corporation or a private nonprofit, it's called a balance sheet. For a government, it's called a statement of position or statement of net position. Okay? It's for a point in time. So this basically says, as of December 31, here's where we were financially. We had this much in current assets, this much in fixed assets. With $2 million in assets, $140,000 in liabilities. That means I got 1.8 million left over for me as a corporation. Okay. A government would have the same thing. It would have, I have assets that are current and fixed, and I'll talk about that in a minute. I also have liabilities, but instead at the bottom it would say fund balance or net assets. But basically it's the same thing. Assets equals liabilities plus what's left over. Yeah, Kim.
Why is accumulated depreciation an asset?
It's not an asset. It's a contra account to plant and equipment. So your assets are plant and equipment. Your assets are your buildings, your trucks, your cardiac monitors. But you've used up some of that. So you say, okay, part of that's been used up. That's what accumulated depreciation is. And so in order to get my fixed assets, I take what I paid for them, subtract off what I used, and that's what's left. That's what my asset is actually worth. That's the way the accounting works. So when you see this balance sheet, assets are listed according to liquidity. So current assets or current liabilities are going to get resolved within the next year. So there's nothing more current than cash, because you can take that to the bank, literally. Okay. Accounts receivable are also a current asset because you expect generally that you're going to collect those in the next year, within the next year. Or you'll collect most of them within the next year. We all know that that's not the case all the time, but generally that's the case. Fixed assets or capital assets are things like property, plant, and equipment, buildings, that kind of stuff, land. Okay. And those assets are consumed with time. So when you buy an ambulance, we talked about before, somebody had a 93, 30 years old, it's still in good shape. It's probably got some life left in it. But they depreciate that over time. So it's not as valuable as it was in 1993 when they bought it. And that's what depreciation is. So every year, a little bit of that gets used up and a little bit of that gets taken off the value. So that's what accumulated depreciation is. But one of the things we can learn from this balance sheet is, look at this. Plant and equipment, $10 million. Accumulated depreciation, $9.5 million. What does that tell you about the stuff they've got? Yeah, it's old. It's almost all depreciated, and it will soon need to be replaced. So you would expect them to think, okay, when you look at their balance sheet, they would be putting money away to replace those. Now, obviously, this is a different organization than the one we have the income statement for, so there's not a linkage to that. But that's what you would hope to see, is they go, oh, yeah, these guys got a lot of old stuff. What are they doing about that? Yeah.
If over time, it's really the value of the land and the property.
Okay. Well, this is what's called book value. This is what it shows up as on your accounting system. So if you bought a piece of property for $100,000, well, a piece of property doesn't count because land doesn't depreciate. You don't depreciate land. But buildings do depreciate, and generally they'll be on a 20 to 50 year depreciation. So let's say you bought a building and put it up on your land. The building, say you paid $100,000 for your building, you would depreciate that. And if it's over 50 years, you'd put $2,000 a year, and you decrease it by $2,000 a year for 50 years, and then at 50 years, it would be zero. Well, as you pointed out, property values are going nuts. So you might say, well, hey, we just built a new fire station. We could get rid of the old one. We can sell that to a commercial organization. And they go, oh, yeah, we'll give you $5 million for that. Okay. Well, you take the $5 million, and then when you get the $5 million, it's a sale of an asset, and then you would show a gain on the sale of that asset. So that's how that would be accounted for. If you're a private for-profit, you have to recapture your depreciation because that affected your taxes. Yes. If you're a private nonprofit or a government, doesn't matter because you didn't pay taxes to start with. But yeah, good point though. Yeah, Tim.
I see on here, where do you allow it for not everybody's going to pay that $40,000. So where does that show up? Does it show up on the balance sheet? Does it show up on the income statement? The amount that you expect or you project, you're not going to collect.
Okay. Well, and I did this on purpose because I knew you were going to ask that question. Unfortunately, so the question was, where does uncollectible accounts show up on your balance sheet? And it shows up here in your accounts receivable. So there's two ways to report your accounts receivable. One of those is the net, which is what this is. So the net means your accounts receivable minus your uncollectible accounts, kind of like you did with your net of your fixed assets, your plant and equipment minus accumulated depreciation. You got a number. These guys did that calculation behind the scenes. And so the net of what they expect to collect is $240,000. Maybe a better way to report that on your balance sheet, especially if you have a needs-based grant, is to say, my accounts receivable were $500,000, and I'm not going to collect $260,000. So you would do like accounts receivable, and then you'd have parentheses, allowance for uncollectible accounts, negative that out, and then the net would be $240,000. So that's how you would do it. And it's, like I said, that may be a better way to do it if you're looking for a needs-based grant, because then they can go, crap, these guys they're only collecting half of what they bill. Why is that? Well, because you're in the ambulance industry and half the people don't pay their bill. That's pretty normal. But if you're in another industry, you would expect it to be, closer to the better collection rate. So we've got a rep from Zoll here. I'm sure Zoll's collecting far more than 50% on what they bill. They're not liabilities, they're equity. They're what's left over. Because this is a claim on these assets. These guys that own common stock own the company. So they own everything above that. They own these assets and they own these liabilities. So that's what a common stock is it means you have a stake in that company. Well, because basically you have assets, things that give you value, liabilities, claims on that, and what's left over. And what's left over is equity or fund balance. Oh, sorry. So the question was, why is equity down here at the bottom as opposed to being an asset? Now, if this company owns stock in another company, stock that they don't. So if these guys bought Apple, they would have an asset that said Apple stock, $1.8 billion.
Owners of the company, or is that money that they're setting aside in the place?
Retained earnings is basically the accumulation of your net income. So the question was, what is retained earnings? And retained earnings is not money you're setting aside. It's the accumulation of all your net incomes. So when you have a profit on your income statement, let's say it's a private company, so we'll give them $1 million of profit this year. When they made this last year's statement, only showed $760,000 in retained earnings. This year they made $1 million. It adds to that. So, as we go along, I will show you the linkages between the statements, but basically that's where it shows up. So retained earning is the accumulation of all of your net incomes. Yeah.
Are you saying some cases put in for a grant that we dumb it down basically and just consolidate it to a simple one for the grant, or use what the actual accounting software shows?
And the question is it okay to quote dumb down your balance sheet or quote dumb down your income statement when you use it for a grant? And you're not dumbing it down, you're summarizing it. So, and that would be okay if you're summarizing and not hiding things. So, for example, like I said, on the income statement, your utilities didn't need to say, I spent $50 on electricity, I spent $125 on gas, I spent $50 on phone. You don't need that. You need to say, I spent this much on utilities. So it's perfectly acceptable to summarize it. And when you think about it, there's a guy looking at grants. He's got 20, 30 grants to look at. If you provide him with an income statement that's summarized and readable and explained, he's going to go, oh yeah, this is a lot better. So now your accounting software that you have at your organization is set up to probably provide you with granular information that you need as a manager to make sure that, well, how come my phone's $75 instead of $50? That's important to you as a manager. It's not important to somebody that's looking at it because they just want to know what the total is. So there is a way in most accounting software to do summary reports. So instead of having, literally, I was looking through income statements that would be like 3 or 4 pages. I was looking through balance sheets that were on, 3 or 4 pages. And really, this is a good balance sheet because it's simple. Has your current assets, has your fixed assets, has your liabilities, what's left over. That's really what's important. And you want to have enough detail that you can get certain things like this accumulated depreciation item to say, yeah, I need this information to support the fact that I need this ambulance, this building, whatever, because my stuff's old and wearing out. It might be worthwhile, as I mentioned, to put the allowance for accounts, uncollectible accounts here. So people go, yeah, you're collecting 50%. And then you can also explain that. So, well, Sean's not here to give a hard time to. So let's say Summit County, they've got a low Medicare group or low Medicare profile. They might collect 70% on their accounts. And Benton County out east is 80% Medicare. They might only collect 20% on their accounts because of that Medicare allowance. If you have an allowance for uncollectible accounts and yours is only 20%, you can say, here's the reason that it's 20%. I actually collect 100% of what I'm allowed to collect, but 80% of it gets flushed down the toilet because the government won't pay me for it through Medicare. And that's who all my patients are. So
Medicare debt not legally allowed to collect, and saying the bill we said to Eric Schmidt that we should collect, but he would use
yes,
those different
you could put that as different line items. The ones that you would say would be contractual allowances would be Medicare, or if you made a agreement with Cigna and you said, yeah, we'll transport your patients for $500. Anything more than 500, you write off as a contractual allowance. And then you could write down, yeah, deadbeats. Yeah. Yeah, there you go. So Aaron's come up with a new account. So you can put deadbeats down and put my name. But yeah, you could do that too. So you want to make sure that when you do that, you identify that, and then you can say that when you explain your financial statements for that need-based grant or the need-based donation or whatever you're getting asked for. Yeah, so anyway, order of liquidity. Current assets are things that get converted into cash within a year. Fixed assets or capital assets are things that take longer than a year. And so like that Apple stock, you might be buying Apple stock and you want to hold it forever because it's going to go up in value and then you're going to get rid of it when you die. That would be a long-term asset. If you just bought it and you want to flip it and you're going to flip it within a year, it would show up in current assets. And like I said, maybe gross or net. So net, I have accounts receivable net here because that allowance for uncollectible accounts is not shown on this. But this is gross. So I got my plant and equipment gross minus accumulated depreciation, and the net shows up there. So that was to illustrate the difference between those two, or that are different ways of providing that. It's perfectly legitimate to just say I have $500,000 of fixed assets, but that doesn't give very much information to the user of the financial statement. So think about what message you're trying to tell, what story is behind this. Okay, so this basically a balance sheet is assets equals, and you notice you got 2,000 or 2 million here, 2 million here. So assets equals liabilities plus equity. Okay, so that's why it's called a balance sheet, because that always equals that. And that's assets minus, or I guess assets equal claims on assets. These are contractual claims, liabilities, accounts payable. You owe somebody money. You owe somebody, you're going to pay off your bridge loan. You owe the bank that money. Yep, long-term liability. You owe on a vehicle lease. You have a mortgage. And this is what you owe your stockholders. This is what the stockholders own. So whatever's left is theirs. So if this corporation goes out of business, they take what's left and split it up between the stockholders. So this is basically a claim on these, but it's whatever's left over after you pay your liabilities. So that's what a balance sheet is. Other questions? All right, next thing we'll talk about is a budget. And what does this look like? Have we seen this before? Anyone? Bueller? Bueller? Go ahead, Bueller. It looks like an income statement, doesn't it? It's got revenues, expenses, and a surplus or deficit or a profit, right? What's the difference? Yeah, the difference is it's prospective. It's a plan. Okay, so January 1 to December 31, 2022. It's in the future. So this, a budget is what you expect to have, what you expect your income statement to be. You think this is what we think is going to happen, or this is what we'd like to see happen. We'd like to get $100,000 in property taxes. We'd like to get $2 million in sales taxes. We'd like to get $10,000 in specific ownership. We'd like to collect $250,000 in water fees. We'd like to collect $200,000 or $2,500,000 in interest. What's the one thing you know about a plan? 100% guaranteed. It'll go to hell.
I like my plan for having the AV working. It went to hell.
So the one thing you know about a plan is it's not going to ever be perfect, right? 100% guaranteed. You will never have a perfect plan. There's no company ever that came out and wrote about a budget and ended up with the exact number on their surplus or their deficit or their profit. Never happens. Because you don't know. There's so much uncertainty. You know, you're trying to collect property taxes. Well, what if one of your what if one of your property holders goes bankrupt? You're not going to collect their property taxes. Right? Eventually you will, but you won't collect them now. What if there's a pandemic and nobody registers a car? Shit your specific ownership taxes into the weeds. So this is a guess. This is a forecast. This is an expectation. It's anticipating. What's another thing you know about a plan? There you go. Plans can change. So if this was your budget, say we're in 2019 and this is our budget for 2020. And then March rolls around, you might go, okay, all this is out the window. Let's make a new plan. Okay. You can do that. Now, when you're submitting your stuff for the grant application, you submitted this in February before March of 2020 rolled around. So I have this version. And when it comes to the time when you talk about your grant before the grant review committee, you can say, by the way, we took that plan, threw it in the trash, we had to rework everything. Or you can say, yeah, we've thought about things and we're going to do things differently. These guys have a capital expense. They're buying a water tank. Okay. They might go, well, you know, if this would have been 2020, they might have gone, okay, we lost all, there's no construction going on, all that. We're taking this off and we're going to have an extra $3.5 million in the bottom here. And we'll spend it the following year, or we'll, you know, 2 years, whatever. And that's the other thing you want to talk about is that since it's a plan, you can change it and it's discretionary. So your board of directors makes the plan, they can change the plan. Yeah, you got a question? The question was, or the statement was that the county that he works for does not allow them to make budgetary adjustments during the year, and that would a budget to actual show the same thing? Well, it would show, a budget to actual would basically have this and compare it to what you have your plan and show what you're actually doing compared to your plan. So it would show that you're not following your budget, and then you would have to come up with reasons why. So that would be something that would be good explanation of the way things have changed, the way things are different. But as a local government, you have the ability to make a supplemental budget. You can make amendments to your budget. And as a corporation and as a private nonprofit, you can do that as well. And there's a process for doing that so people know. And I realize it's an onerous process if you're a government, but it is possible to do that. But yeah, you should think about things like right.
Using the 2020 information that you said, when we planned for or guessed for a certain amount of accounts receivable, actually what came in was like $300,000 less because of the drop off in call volume at that time. So your budget versus your actual shows that didn't match.
Okay.
That's why I was asking.
So the question was, or the statement in question was that in their organization, they have a county government, and if there's a substantive difference between the budget and what actually happened during the year, when it gets to December, they go, let's make a supplemental budget. So basically what they're doing is they're not changing the budget as the changes occur during the year. They're summing up all of those changes and going, holy crap, we're out of compliance. Let's fix it in December. And they go through that process. So that's basically what's happened. But yes, if you have things that occurred during the year and you're stuck with the budget you started with, having a budget to actual as a supplemental piece of information that you use when you're trying to justify your financial statement, the financial need in your grant, for example, that would be a great way to say, yeah, here's what our budget is. Here's what's actually going on because of the pandemic. And here's why we need this grant. But it requires you as the grant writer to explain that. You shouldn't expect me or anyone else as the grant reviewer to go, oh, I understand exactly what's going on, because we don't. It's up to you to tell us what's going on. And so if we ask for a balance sheet, an income statement, and a budget, provide that. And then you say, and I'm also going to provide you this budget to actual that shows this, and say, here's what our balance sheet shows, here's what our income statement shows, here's what our budget was planning to show, and here's what's really going on. You need to explain that. So again, the biggest thing about a budget is it looks like an income statement, but it's for the future, it's a plan, and plans can change. And with respect to talking about grants, one of the things you should be thinking about is if you're asking for a grant, you should think about putting that project in your budget. So if you're planning on buying an ambulance, if you're planning on buying cardiac monitors, you should have something in your budget that says, yeah, we thought about this and this wasn't a wild hair. We've actually thought about it. Our board of directors thinks it's a good idea, and we've made it a funding priority. And it may be that because of the way the government accounting things or cycles work, it may be that when you wrote your when you write your budget says down here in expenses, you know, match for grant in 2023 of X amount, showing that you're planning on setting that aside this year so that you have it next year. If you're not, because basically you wouldn't show the purchase of that item until 2020, and it won't show up on this budget. Or you could provide a multi-year budget. Here's our budget for 23, here's our budget for 24, and look, there in 24, it shows we're buying this ambulance or whatever. But that also goes a long way towards helping you prove that this is a good project because you've already sold it to your board of directors and they've already made it a funding priority. If you just say, oh yeah, we're thinking about getting a grant, and if we get it, we'll buy it. If we don't get it, no. So do you really need this? Good question. Yes.
Not only just communication tool to show where the money is spent, it can also be an education tool as well for you as an administrator, especially when you're comparing your budgeted to actual. If you see where your revenues are going out higher than projected in certain areas, you can learn from that too and then pre-plan for future budgets. Some of that depends on what your fund balances are, because as a government, you can't do deficit spending. So even throughout the year, you may have to do budget adjustments. Like if you're planning on buying an ambulance, but you're running over your budgeted amounts, you may have to cut the ambulance and reallocate those funds to other accounts that are overspending. That make sense?
Of course not. No. So what the comment was is that the budget can be used not only as, you know, information, but it can also be used as education. And as a manager, you can look at your budget to actual, and if things are running in a way that you're not planning, you can say, okay, I'm going to take the money from one area and reallocate it to other areas so that I don't end up violating the law by spending money that I don't have. So that is true. But again, the budget is a plan, and we know that it's just a plan and it can change. So this is only worth the paper it's written on. It's not actually set in stone, because you can do supplemental budgets. You can do all sorts of things to change it. But I think one of the things another thing that a budget shows is, what are your priorities? What are your funding priorities? So you spend a lot of money on wages and benefits. You spend a lot of money on office supplies. You spend $10,000 on training. Now it'd be worth taking their income statement and comparing it to their budget to see how much did they spend on training last year. If they spent $2,000 on training last year and they're budgeting $10,000, you're thinking they must be valuing training, or they're sending somebody to paramedic school. But again, they're valuing training. So funding priorities show up in your budget. What's most important for your organization shows up in the budget. And if they cut the training budget and you're asking for a training grant, that may not necessarily be the thing that you want to say is that we got our budget cut because our board doesn't care about training. So you might say there may be reasons for it, and you need to articulate those and say, yeah, we ended up having our training budget cut, and here is why. Because we had an ambulance go down and we had to spend $250,000 that we weren't planning on last year. Everything that wasn't absolutely necessary got axed this year. And that's why we're in dire straits. But we don't know that unless you tell us. So that's the budget. So I got about 5 minutes left.
Yeah.
I was just going to briefly mention a statement of cash flows because Kim told me to talk about it, even though he didn't put it in the flyer. And this is really important if you're a manager, because you want to make sure you got enough money to pay your bills. So this basically says, you started out with $500,000 in cash. Your net income generated you some cash. And ultimately, your net income is cash. That's your revenue from your sales. Now, depreciation, you already bought the stuff. So you've already spent the cash. Depreciation is just allocating that to a particular point in time. So you add that back in because it's not cash expense. It's an expense, but it's not cash. So you add depreciation back in. And if you have increases in asset accounts, that uses cash. So if your accounts receivable went up, that means you have less money. You have more money in receivables and less money in cash. If your liabilities increase, that's a source of cash because basically you're borrowing using someone else's money. So if your accounts payable goes up, that's actually a source of cash. And then if you invest money, so if you buy something, you used up some cash. If you're financing something, if you made a payment on your financing, you're using cash. And if you got a mortgage, this would be a positive number, is the source of cash. Again, it's retrospective, but basically this makes sure that you have enough money and when it comes in to make sure that you can cover your bills and make sure you have enough cash, because when it's time to write payroll checks, somebody has to be able to walk to the bank with the payroll check. They don't go, oh, well, here's an account, here's a receivable. When we collect that, you'll get your money. Your employees don't usually go for that, right? Well, I was going to talk a little bit about relationships to financial statements. So this basically just shows that the income statement is for this period of time. At the end of that period of time, you create a balance sheet, and the budget is for the subsequent period of time. And then this income statement for the next year, balance sheet for the next year, budget for the next year. So as Alan was talking about, when you're in the middle of this year, you could actually have a statement that shows your budget to action. So here's your, you know what your budget is, and you know what you've actually spent when you're at, June. You can actually figure that out because you have both of these pieces of paper, right? So that's kind of the relationship. And so when like for our grant program at the state, that's why we ask you for an income statement, a balance sheet, and a budget, is so we can see where you were, where you are, and where you're going. That's the whole purpose of that. And it's up to you to say, here's where we are, or here's where we were, here's where we are, and here's where we're going. And explain it so that somebody doesn't have to try to go, well, what can I deduce from this? And I was going to show one more relationship here. So here's your income statement: revenues, expenses, here's your balance sheet: assets, liabilities, and the fund balance. Because this is actually a real one from the government. And as you see, this is the shortest one I could find, and it was still more complicated than it needed. But if you look, see this negative number down here, it's the same as this negative number down here. So your income statement shows your revenues and expenses and your surplus or deficit. And then that deficit ties to your retained earnings or your fund balance. So it shows up as a deficit here. So that was one of the other linkages that I was going to show you. Is when you talked about retained earnings is just the sum of all, the cumulative sum of all of your retained earnings for all of the years. And that's where it goes. So you have your income statement that shows this is what happened. This is what the result was. And here's how it affected our fund balance. So, other questions? But basically what we wanted to learn today was, what are the uses for financial statements? What an income statement looks like. Income statement, revenues, expenses, surplus or deficit or profit or loss, whichever you are. What does the balance sheet look like? Assets, liabilities, what's left over. Assets equal liabilities and what's left over. And then a budget is basically what your plan is for your income statement. Next. So, other questions? Well, thanks for staying awake because this was hard to do. So, is there any questions? I guess Tim would tell me if there's any questions online. And there's my email. Feel free to email me, and when I respond to you, you can get my phone number, or I can just give it to you. Happy to talk. Happy to provide information anytime possible. So, thank you guys very much.